Welcome to the Deep Dive. We're here to help you stay informed, cutting through the noise.
Today, we're digging into Vipshop Holdings Limited. Their second quarter 2025 earnings call just happened pre-market on August 14th.
Exactly. Our goal, to break down the numbers, understand their strategy, and figure out what it means for you, especially, in today's market.
It's a really interesting one. Vipshop seems to be finding its footing despite some headwinds.
Yeah.
Some of the top-line figures might look a bit, flat, but underneath there's some deliberate moves, a real strategic focus, actually. It paints a picture of, I'd say, surprising resilience.
Okay, resilience. Let's start with the results snapshot then. What did Q2 look like?
Well, I'd call it mixed, but overall positive, really.
Okay.
Their adjusted profitability metric, the non-GAAP diluted net income per ADS.
Right, the one that strips out some of the noise?
Exactly. That came in at RMB 4.06. That's up from RMB 3.91 last year.
And importantly, it was a bit better than analysts expected, right?
Yeah, just slightly beat the street. So
yeah.
A good sign on the profit front.
Okay, but what about revenue?
So total net revenue was actually down slightly, 4.1% year over year, landing at RMB 25.8 billion.
A dip, but...
But it also managed to nudge past the consensus forecast. So the market was kind of bracing for a bit worse, and Vipshop cleared that bar, gives a bit of confidence,
Okay, here's what caught my eye, though. The gross merchandise volume, the GMV.
Right, the total value of stuff sold on the platform.
It actually grew, up about 1.7% year over year to RMB 51.4 billion. That feels significant. Seeing GMV growth return, that signals some real stabilization in the core business, doesn't it?
Absolutely. That's a key indicator for these platforms. And the market seemed to agree. The stock popped a bit after the announcement.
So what's behind that GMV recovery? Was it just luck?
Doesn't seem like it. Management really highlighted swift action from their team. They were actively working to revive customer activity, get sales momentum going again.
So proactive measures.
Definitely. They weren't just waiting it out. And this stabilization, this GMV bump, it was largely driven by their strength in apparel and related categories.
Leaning into their core competency. Makes sense.
Exactly. And it connects to the customer picture, too.
How so?
Well, total active customers showed, clear signs of recovery. And maybe more importantly, new customer growth actually came back after, several pretty tough quarters.
That is a big win, getting new people onto the platform again.
Yeah, it shows they're not just holding on to users, but maybe expanding again.
But who are these customers driving things? Is it just the new ones?
Well, that leads us to a really crucial part of their story. The super VIPs, or SVIPs.
Their most loyal, highest spending group.
Precisely. Active SVIP numbers jumped an impressive 15% year over year.
15%?
And get this group, these SVIPs, contributed 52% of Vipshop's total online spending.
Wait, 52%? Over half?
Over half, yeah. It just hammers home how incredibly important that loyalty program is. They've got a really sticky, high-value core user base.
Wow. And are they just letting that ride, or are they nurturing that group?
Oh, they're actively nurturing it. They're upgrading the SVIP program, offering things like exclusive private sales, more personalized experiences.
It's like a VIP club within the platform.
Pretty much. Deeper personalization, maybe early access, even unique products just for them. It's about making those high-value customers feel special and, frankly, making it harder for them to leave.
Locking in that loyalty, that ties into their broader strategy too, right? This idea of being a discount retailer for brands.
Exactly. It's not just about being cheap. It's about being relevant, different, specialized, offering high-value brands, quality stuff, but at really good prices.
So a curated value proposition.
Right. And they're actively expanding that. In the first half of 2025 alone, they brought nearly 500 new brands onto the platform. 500
new brands. That's quite an influx.
It signals they're serious about growing that curated selection.
And part of that curation is the made-for-Vipshop apparel, isn't it? Tell us about that.
Yeah, this is a key differentiator. These are exclusive lines, maybe collaborations, developed specifically for Vipshop.
Not just carrying standard inventory.
No, it's more tailored. And it's not just a small thing for many brands participating. These exclusive products made up over 20% of their apparel sales on Vipshop.
20%. That shows it's really working. Creates value customers can't find elsewhere.
Exactly. It's like creating a signature dish. Exclusivity matters in fashion.
Okay, strategy sounds focused.
Yep.
What about the nuts and bolts, the operations? Financial health.
Very disciplined there. They kept their gross margin steady at around 23.5%,
Well,
almost flat year over year, which is impressive given the slight revenue dip.
shows good cost control.
Absolutely.
Mm.
And their non-GAAP operating margin was healthy too at 9.3%. They're running a lean ship.
And cash flow. Still generating cash.
Oh yeah, strong non-GAAP free cash flow about RMB 801.8 million for the quarter. That's roughly 112 million US dollars. Vital for investing in shareholder returns.
And speaking of investing, they're looking at AI too.
They are actively developing and using AI across different areas. Things like AI-generated reviews, Q&As, AI for sales support, even AI for marketing content.
Is it just talk, or is it actually doing anything yet?
They mentioned promising early results. So think practical stuff, summarizing reviews faster, answering basic customer questions instantly, personalizing ads better. It seems to be moving beyond just buzzwords into actual application.
Interesting. And what about physical stores, the Shenzhen outlet business?
That's another angle. They've got 20 of these outlet stores now, and they've kept up double-digit comparable store growth for several quarters.
What's driving that?
It's really tapping into that value for money trend we're seeing in China. Consumers are cautious, looking for discounts on quality goods. These outlets fit right in.
And Vipshop sees this as long-term?
Yeah, a strategic asset.
Yeah.
It diversifies them beyond just online, gives brands an outlet, gives consumers a physical touch point for value. It's a complementary, resilient channel.
Okay, but you can't ignore the broader picture. Macro softness in China, intense competition, especially from those quick commerce guys. Did management talk about that?
They did address it head on, and their take was quite interesting, actually.
How so?
They emphasized that their main focus, apparel, just doesn't overlap that much with quick commerce. Quick commerce is about, groceries, daily needs, stuff you need delivered in like 30 minutes.
Right, apparel isn't usually an emergency purchase.
Exactly. People are generally okay waiting a day or two for a specific fashion item they've chosen. Vipshop isn't competing on that instant delivery for essentials.
So their unique apparel focus and that strong SVIP base kind of insulate them.
That seems to be the argument. They even stated they see no material impact from quick commerce or even recent bad weather on their business. Their differentiation strategy seems to be holding up.
They sound quite resilient then.
They do. They're not trying to win the price war on commodities. They're building a moat around branded apparel and loyalty.
So looking forward, what's the guidance for Q3?
They expect total net revenues between RMB 20.7 billion and RMB 21.7 billion. That translates to year-over-year growth of somewhere between 0% and 5%.
0 to 5%. Modest, but positive.
Exactly. In the current climate, stability is key. Management attributes this expected momentum to the changes they've made: organization, merchandising, operations. They sound confident they can maintain this steady growth.
Okay, so let's bring it back to the investor perspective. What are the key takeaways for someone looking at Vipshop stock?
Well, first off, the market's initial reaction was positive. Stock up about 2.4% pre-market. That's a nod of approval.
And the technicals look better too.
Yeah, the relative strength rating got an upgrade from 66 to 76. Means it's been outperforming the market recently. And some analysts noted it's forming a potential cup-with-handle-based pattern.
A pattern suggesting a potential upward move after consolidation.
Could be, yeah. But fundamentally, that strong SVIP growth driving over half their spending, that points to a really valuable, predictable customer base.
And their focus on exclusive brands, the made-for-Vipshop stuff, that helps build that moat we talked about.
Definitely differentiates them. But I think for many investors, the really big story here is the capital return strategy.
Ah, yes. The commitment to return cash to shareholders.
A huge commitment. They reaffirmed they'll return no less than 75% of their full year 2024 non-GAAP net income back to shareholders in 2025.
And that's around 900 million US dollars.
Roughly, yeah. That's a very strong signal about their confidence in cash flow and their own stock's value.
And they're actually doing it right, not just promising.
Oh, absolutely. They already returned over $640 million in the first half of 2025 through dividends and buybacks. Q2 alone saw nearly $350 million in share repurchases.
The highest buyback amount in 2 years, I read.
That's right. It really shifts the narrative. Vipshop isn't pitching itself as a hyper-growth tech darling anymore. It's looking more like a resilient, value-oriented e-commerce play, especially in uncertain times.
So key things for investors to watch going forward.
Definitely hitting that Q3 guidance. Keeping those SVIPs engaged. Seeing success with the exclusive lines. And, critically, Maintaining the pace of those buybacks and dividends, those are the proof points.
All right, let's shift gears to our wild yet plausible trade idea segment. Disclaimer up front. This is purely a thought experiment, not financial advice.
Absolutely, standard disclaimer applies. So let's look at Vipshop through this new lens, stable, returning cash, maybe not explosive growth.
Right. Given that massive commitment to return cash, that $900 million figure, could you build a strategy around just capturing that yield?
That's the idea. A long-term dividend and buyback capture play. You take a long position in VIPS, not necessarily banking on huge price jumps, but focused on collecting that steady stream of cash returns.
Okay, straightforward enough. But you mentioned enhancing it.
Yeah, here's where it gets a little more creative. You could consider selling out-of-the-money put options, maybe with longer expirations.
Selling puts, meaning you collect premium upfront.
Exactly. That premium instantly lowers your effective cost basis on the shares you already own. It's an extra income stream right there.
But what if the stock drops and the puts get assigned? You'd have to buy more shares.
That's the potentially clever part. If they get assigned, yes, you buy more shares, but you buy them at that lower strike price, minus the premium you already collected. So your effective purchase price is even lower.
Ah, so you acquire more shares cheaper, which actually boosts your overall yield on cost for the whole position. And you get to benefit more from future buybacks.
Precisely. It turns a potential pullback into an opportunity to load up at a better yield. It becomes almost cyclical, leveraging their strong cash flow and that explicit return promise. You're essentially treating it like a high-yield income vehicle within e-commerce, using options to potentially juice the returns.
So it's a conviction play on management actually following through on their capital allocation plan. Interesting. Again, just a thought experiment.
Definitely just an idea to chew on. Do your own homework.
Okay, let's wrap this up. To recap, Vipshop's Q2 showed a business that's really stabilizing, even finding strength amidst a tricky economic backdrop.
Yeah, driven by that powerful SVIP base, their smart merchandising, focusing on apparel value, and crucially, that very strong commitment to returning capital.
Their unique position in curated apparel and that loyalty focus seem to be paving a distinct path forward in a competitive space.
It really does look like a resilient strategy taking shape. It'll be fascinating to watch them execute.
Absolutely. And remember, everything discussed here today is for educational purposes only. It is not financial advice. Always do your own thorough research.
And maybe think about it as Vipshop pivots to value for money, where in your own approach, perhaps not just investing, could you find resilience by focusing on core value instead of just chasing growth?
Good food for thought. Send us your questions and ideas for future deep dives.